Hey everyone, welcome back to another Tesla earnings conference. Super excited to listen in on this. The earnings honestly smashed. They were really, really incredible earnings. The stock market, as usual, isn't doing Tesla justice in terms of these earnings. Generally, after earnings, Tesla does not do so well. So it's not a surprise, but boy, oh boy, if you were ever concerned about Tesla, these numbers just go to prove that Tesla is a killer. Absolutely exciting. So we are on standby for the beginning of the audio webcast. And of course, we'll be taking notes throughout. Let's listen if they've got music going on. Yep, they've got their typical music that generally gets you demonetized if you play it, so we're not going to play it. But I'm excited to go through these together. We'll have fun. We'll take some notes. And we'll see, really, I think there are going to be questions about the Cybertruck. We're going to see what's going on there. We're going to see what's going on with questions about, let's see, I want to know, too, what kind of questions you have. But I think big question is going to be Cybertruck. When are we actually going to get those Y deliveries, or those Y productions in, like, Austin or in Berlin? Because if we get those towards the end of 2021, then we're probably not going to see Cybertruck until right after that. Well, especially since that's what they said. They did say that we wouldn't see them until after the Cybertruck, until after the Y gets produced at the new facility in Austin. So we'll see what happens. Also curious to see if there was any sort of one-time reason that we saw margin pump the way it did. Let's see. Nope, still on music. Yeah, if there was any kind of one-time reason, we want to know about that. We also want to know if we think, is this a small growth? Like, is there going to be more sort of growth coming for this marginal improvement, or improvement to margin? So what gets said here could be pretty big. So we'll see, or it'll be boring. We'll find out. Nope, still listening to music here, so still on standby. Yeah, a lot of questions as well about batteries, inverters, solar, the mega packs. What's going on with the mega packs? Excited to see that. Still on music here. Do I think that Bitcoin will pump because of this? Not necessarily, honestly. I mean, I don't know about that. We've got Tesla right now up 2.31% here in the after hours. Some very bizarre price action here. Yeah, and BTC USD, I'm sure we'll get some Bitcoin commentary, but this is a very interesting sort of this plummet we had here. Jeez, what was that? Yeah, that's a minute plummet here.
No, but we're reaching back a couple of years for the financial.
Oh, sorry, wrong bar. Nope, still on music. Okay. I'm like, oh, that sounded like we were in the middle of it. But anyway, this is such a bizarro 1 minute chart here that we have on Bitcoin. So we'll see if anything gets modified here. But look at this. We go to the 5 minute chart. I mean, what a bizarro run we've got here. And it seems like we're always playing the lines here. So pay attention. Nope, still waiting here. Compare chart. Apple with Tesla. That's a good one. Let's see. Tesla. There we go. Oh, man. Yeah, if you went back a year ago, it'd be interesting. Although, if you go see, because I know that Apple pretty much traded sideways from September and then started taking off. Let's see here. Yeah, here's that sideways. Here's September sideways, and then that takeoff. It's interesting. Still on music hold here. Waiting for those earnings to begin. Now I see some similarities. I can see that. So we'll take a peek here. We are, let's see here. Okay. Still waiting for this to begin. All right. Okay, just waiting. All right, let's try again. Nope, still waiting for the call to begin. So we're about 2 minutes behind here on the Tesla earnings call. No worries. Big earnings beat. So very, very excited to see this and excited to get into the details here. I'll be taking good notes here. ARK analyst mentioned that Kathy and Elon are planning to bring, well, I think Elon, not Kathy. But yes, Elon has mentioned that he's planning on bringing back the Bitcoin payments for cars. Yep, still waiting. Okay, Elon's still on his jet. His jet gets used for more purposes than just him. worth noting. Okay, so let's see here. Waiting again for earnings to begin. Nope, still on music. Stock currently up 2.3%. I'm excited to see this. We'll see how this goes. It's always big for Tesla, so we'll see. Anybody have questions in the meantime? How are questions doing? Okay, let's see here. We've got this. Good. All right. Okay. So 2.41% on Tesla now, waiting on BTC as well. Still waiting for that call to begin. Any minute now, the call should begin. Bitcoin oddly falling here at the moment. It's also very interesting to see it. Look at it on that 1 minute. This was really within a minute. Let me see here. I'm going to zoom in. Pretty sure. This was within a minute. This was just sort of a algorithmic, all of a sudden plummet here down to 36,490. Really quickly fell to really the other support line here. And now we're just trading this line here on Bitcoin. Hey, who knows? This could be a catalyst for crypto as well, good or bad. Still waiting. All right. Okay. Nope. Okay. Anybody have questions in the meantime? Question: do you think they'll announce that they'll drop Solar Roof project as it's been a blemish on their books for a while? No, I think there's no chance of them giving up on the Solar Roof project. I mean, I think there's like a 2% chance they're going to give up on that. I think the project is phenomenal. It takes a while to get that kind of stuff to scale, and I'm not trying to make excuses for them, but people's roofs suck too. I never expected them to be at parity with roof costs. Like, I wouldn't buy a solar roof. I think it's insanely expensive. But I could see some people building like modern homes wanting to do that. Lucid will drop, Tesla will rise in the short term, says someone. Okay, got it. You need to put your last name in YouTube videos? Yeah, probably. Kevin Paffrath. 20. No, I don't think the $23 million are getting written off on taxes. Just gap loss there. Member code called Tesla to the moon, right? Maybe September to November. Still waiting. We are about 6 minutes late now on the earnings call, so on standby here. Waiting and waiting and waiting. Let's go ahead and turn it up a little more. Nope, still waiting. Okay. So at the moment, well, we just got another fall here in crypto here. Looks like people are really trading crypto. I'll tell you, which, I mean, I know that might sound crazy to hear, but I'll tell you, I am surprised to see how much trading there is in crypto. As soon as we hit that 40 number, basically today, it was just like sell, and then we get the big sell orders coming in. That's crazy. Still waiting for the earnings call to begin, but yeah, I mean that's a big sign that a lot of people are taking advantage of swing trading crypto here. So what else we have here? Lucid's got a long way to go, unfortunately. Look, and I'm a big fan. Could you do your courses on your app? Probably not anytime soon. I'm a big fan of Lucid. I'm just like really itching to see them actually get a product out the door. Like, please sell a car. Robinhood or Webull for beginners. You know, if you're just going to buy just straight up shares, it's not a horrible idea to just pick up something, even like public.com, honestly. Just keep your life simple. Just get invested, right? But honestly, if you're so early at investing, you might also consider getting into investing in real estate. Yeah, real estate. But maybe not specifically right now, because the market right now is I think we're gonna have a little bit of breathing room coming to the market here, which is gonna be a good thing. Still sitting around waiting for this earnings call to begin. Kind of just robbed us of 8 minutes here with their late start on the earnings call. Music is adequate. I am not gonna play that music because the last time I played that music, we got demonetized, and we do not want to do that. That'd be crazy. That'd be nuts. All right, listening in again.
2021 financial results and Q&A webcast. At this time, all participants are in a listen-only mode. After the speaker's presentation,
How's that volume, by the way?
this session. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded. If you
Really?
require any further assistance, please press star 0. I would now like to hand the conference over to your speaker today, Martin Vieca, Senior Director of Investor Relations. Please go ahead.
Thank you and good afternoon, everyone. Welcome to Tesla's second quarter 2021 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you would like to join the question queue. But before we jump into Q&A, Elon has some opening remarks.
Ooh, Elon.
Sure. So to recap, Q2 2021 was a record quarter on many levels. Yeah. We achieved record production, deliveries, and surpassed over $1 billion in GAAP net income for the first time in Tesla history. I'd really like to congratulate everyone at Tesla for an amazing job. This is really an incredible milestone. It also seems that public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward. Regarding supply chain, while we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which there are a wide range of chips that are at various times the slowest part in the supply chain. I mean, it's worth noting that if we had everything else, if we had vast numbers of vehicles and cells, we would not be able to make them. If everything except the chips, we wouldn't be able to make them. The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control, essentially. It is.
He sounds frustrated.
Getting better, but it's hard to predict.
It's not good.
So, in fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating the vehicle, and testing in order to maintain production. And and I'd also like to thank our suppliers who work with us. And there've been many calls, midnight, 1 a.m., just with suppliers in resolving a lot of the shortages. So thanks very much to our suppliers. Let's see, in terms of Fsd Subscription, we were able to launch full self-driving subscription last month, and we expect it to build slowly but then gather a lot of momentum over time. Obviously, we need to have the full self-driving build widely available for it really to take off at a high rate, and we're making a lot of progress there. So, yeah, I think Fsd subscription will be a significant factor probably next year. With regard to Giga Texas and Giga Berlin, we're actually doing this earnings call from Giga Texas, so we're in the factory right now doing this earnings call.
I hear it.
And the team's made incredible progress here. You can see the pictures online, and see that there's basically nothing a year ago, and there's a mostly complete large factory a year later. So it's really great work by the Giga Texas team. And then also great work in Berlin.
Here you go.
With Brandenburg, with the team there. So we expect to be producing the sort of new design of the Model Y in both factories in limited production later this year. It's always like it's hard to sort of explain to people who have not been through the agony of a manufacturing ramp. Like, why can't you just turn it on and make the 5,000?
That means Cybertruck 2022, by the way.
So hard to do manufacturing. It is so hard to do production. First approximation, there are 10,000 unique parts and processes that have to work, and the rate of growth of production goes as fast as the least lucky and dumbest of those 10,000 things. And a bunch of them are not even in our control. So it's like, it's insanely difficult. I'm fond of saying that prototypes are easy and production is hard. And arguably the really remarkable thing that Tesla's done is not to make an electric car or to be a car startup, because there have been hundreds of car startups in the United States and outside the United States. So the thing that's remarkable is that Tesla didn't go bankrupt in volume production. That's the amazing part, because everyone else did. Because they all thought the prototype or the idea was the hard part, and it is not. It is trivial by comparison with actual production. So it's always worth noting that of all the American car companies, there are only two that have not gone bankrupt, and that is Ford and Tesla. So, the seeds of defeat are sown on the day of victory, and we must be careful that we do not do that. So often, if you look at history, so often the seeds of defeat are sown on the day of victory. We will endeavor not to make that the case at Tesla.
That's interesting.
So let's see. The Model Y in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So, for example, the Model Y made here and in Berlin will have a cast front body, and in California has a cast rear body, but not a cast front body. We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction. And but we're not counting on that as the only way to make things work. We have sort of a backup plan with a non-structural pack and 2170s essentially. So, but at scale production, we obviously want to be using 4680s and structural pack. From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go. So the light is lowest cost. But there's a lot of new technology there, so it is difficult to predict with precision.
See on screen, by the way, what I just tweeted.
And Drew's going to talk a bit more about the 4680 production. Yeah, so we are making great progress on the 4680 cells. But there is a tremendous amount of innovation that we're packing into that 4680 cell, and so it's not simply a sort of minor improvement on state of the art. There are, and we went through this on the battery cell day, really dozens of, half a dozen major improvements and dozens of small improvements. So I think it will be great, but it's difficult to say when the last of the technical challenges will be solved. So in conclusion, our team continues to make huge efforts to make our factories run at full speed, which is very difficult. We have had some factory shutdowns due to part shortages, and we hope those will be relieved in the coming weeks and months. And we're making great progress on full self-driving. Some of the progress is not easy to see because it's at sort of a foundational software level. And so then it ends up being sort of a 2 steps forward, 1 step back situation. But over time, you do 2 steps forward, 1 step back, and keep going. You do move forward. I'm highly confident that the cars will be capable of full self-driving. If they have a full self-driving computer and the cameras, I'm confident that they will be able to drive themselves with a safety level substantially greater than that of the average person. Once again, thanks to all of our employees who are making this a breakthrough year for Tesla and an incredible quarter. Thanks, guys.
Wow.
Thank you very much. And we have
not very optimistic there from Elon, but very real. But he's not bullcrapping.
Just to reiterate, Q2 was a great quarter for the Tesla team with strong improvements across the business.
Here comes the sweet talk.
Auto gross profit and margin, excluding credits, increased substantially. This was primarily driven by better cost optimization across our factories, good execution against our cost reduction plans, as well as increases in production and delivery volume. There was some benefit from pricing action, mostly in North America. However, it was small in the context of the other contributors. Note that the Model S and X program was at a slight loss for the quarter due to the relatively low volume. And supply chain challenges, including expedites, continue to provide cost headwinds. Additionally, it's encouraging to see the progress made on profitability within our energy and services and other businesses. While there's some benefit to looking at our progress quarter over quarter, I find it more helpful to look at progress over a slightly long-term horizon. Over the last 2 years, our vehicle delivery volumes have more than doubled. This volume increase was made possible by a steady decrease in ASPs of more than 10%, driven by a roadmap to increase affordability and shifting mix towards our more affordable vehicles. Yet over that same period of time, our auto gross margin, excluding credits, has increased nearly 10 percentage points to our highest yet since the introduction of Model 3. This is only possible because our average cost per vehicle has reduced by more than the reduction in average price. This is a remarkable achievement in the context of the volume growth and ASP reduction I've mentioned, and a testament to the hard work by the Tesla team. Additionally, OPEX as a percentage of revenue has declined, and in particular SG&A, representing the work we've done to become more efficient as we scale the company while still making the required R&D investments to support our future.
Nice.
As a result, our GAAP operating margins have risen from negative to double digit, in line with what we have guided. By managing our overhead costs and driving higher volumes, our P&L is benefiting from the marginal profitability of each incremental unit. Or said differently, we are recognizing the benefits of scale and improved fixed cost absorption. With strong operating cash flows and cash balance, we are putting that cash to use. CapEx continues to tick up, primarily driven by capacity investments in Austin, Berlin, and Shanghai. Additionally, each quarter we are using our cash to retire legacy debt, which was taken on at a time when interest rates and company risk were much higher than in today's environment. As I've mentioned before, our 2021 volumes will skew towards the second half of the year as we push for continued sequential increases in volume. Despite the great work so far managing the instability of the supply chain, these challenges remain and are unfortunately increasing in pain with a higher volume. As we work through the uncertainty, we want to ensure we do our best to manage customer wait times, as well as the impact these interruptions have on our employees and costs. And as Elon mentioned, volume growth will be determined by part availability, as we have the factory capacity ready and are in a strong demand position. I'm excited to see the progress made by the Tesla team as we continue building the business and strengthening our financials. Thank you very much.
Great, thank you very much, Zach. And now let's go to the retail investor questions on say.com. The first question from Robert M. is, Tesla's website still says Cybertruck production is expected to begin in late 2021.
Nope.
Can Tesla share more details on the current status of the Cybertruck and confirm if production is still...
It ain't going to be 2021, bro.
Okay.
Lars, do you want to
It's going to be after the Y, and they said they're going to go limited production on the Y this year.
Yeah, the Cybertruck is currently in its alpha stages. We finished basic engineering architecture of the vehicle. With the Cybertruck, we're redefining how the vehicle is being made. As Elon said, it carries much of the structural pack and large casting designs of the Model Y being built in Berlin and Austin. Obviously, those take priority over the Cybertruck, but we are moving into the beta phases of Cybertruck later this year, and we'll be looking to ramp that in production in Giga, Texas after Model Y is up and going.
Look at him not answer.
Yeah, just worth reemphasizing that the extraordinary difficulty of ramping
Beta this year.
Production of large manufactured items.
Not going to happen.
Being repetitive, it's actually easy to make prototypes or sort of handle small volume production, but anything produced at high volume, which is really what's relevant here, is it's going to move as fast as the slowest of the, say, rough order of magnitude 10,000 unique parts and processes. And so you could have 9,999, but just one is missing. I mean, we were missing, for example, like a big struggle this quarter was the module that controls the airbags and the seatbelts. And obviously, you cannot ship a car without those. And that limited our production severely worldwide in Shanghai and in Fremont. So it wouldn't have mattered if we had 17 different car models because they all need the airbag module. So it's just irrelevant. In order for Cybertruck and Semi to scale to volume that's meaningful for customer deliveries, we've got to solve the chip shortage, or working with our suppliers. People sometimes say, "Why don't you just build a chip fab?" Okay, that would take us, even moving like lightning, 12 to 18 months.
Why are they just not saying it's probably going to be the beginning of next year because they're worried about the stock tanking? It's not going. The Cybertruck's not coming this year. Get over it. Just say it.
Some of these things are, Anyway, it is quite a trial dealing with all of the constraints of scaling a large manufactured object. I think it may be the case that Tesla is scaling. I think we might be the fastest in history ever for scaling a large manufactured object. I think maybe the Model T would have been comparable back in the day, the Ford Model T. Probably the internet knows the answer, but I think we may be scaling a large manufactured object at the fastest rate in history, or I'd like to know who did it faster so we can learn from them. So it's worth just noting that, in the grand scheme of things, it's not bad. So the Cybertruck and Semi actually both are heavy users of cell capacity. So we've got to make sure we have the cell capacity for those two vehicles, or it's kind of pointless. We can make a small number of
stock's falling
of vehicles, but the effective cost if you make a small number of vehicles is insane. They would literally cost $1 million a piece or more. And there's a reason why you do things at volume production, which is to get the economies of scale that get the cost down. But we are looking at a pretty massive increase in cell availability next year. But it's not like in January 1. It comes through it ramps up through the course of next year. But even without Tesla's
Elon, where'd you go, bro? Elon just cut off. Hold on.
Okay.
There we go.
Even without Tesla cell production, we believe our suppliers will be able to deliver about twice as much cell output in next year as this year. And Drew, do you want to talk more about that?
Yeah. Given concerns over cells bottlenecking growth, our target is to grow cell supply ahead of the 50% year-on-year growth targets of the vehicle business, and also enable increased energy storage deployments.
Yeah.
So yeah, our cell suppliers are tracking to double their production in 2022.
Yeah, it's worth noting, like, if you have a target of a certain number, that doesn't mean it happens like as sure as night follows day. It's a target. So if there is some calamity in the world that interrupts the supply chain, then it will be less. But with the contracts that we have with cell suppliers call for roughly a doubling of cell supply to Tesla in 2022. And we have to juggle these exponential, there's a whole bunch of exponential graphs sort of overlaid on top of each other. And small changes in where you are on the x-axis of time can quite substantially change the area under the curve. So what we're thinking of doing is, like, depending on, it's basically overshooting on cell supply for vehicles, and then as we have, say, excess cell supply in 1 month or another, then routing that cell output to the Megapack and Powerwall. All by the same token, if we're prioritizing vehicle production, if there's a shortage of cell output for some reason, then we will throttle down Megapack and Powerwall production. So that something's got to give, basically.
Or if there's a disruption to vehicle production, yeah, we have an outlet for the cell capacity.
Yes, exactly. There's a tremendous amount of inertia in the supply chain. So if we say to a supplier, we want you to double cell output, well, even doing that in a year is very difficult. And then that system has a tremendous amount of momentum. It is like a flotilla of super tankers. It's insane.
Speaking of which, from a raw materials perspective, we also have long-term contracts to secure our supply chain to also enable this growth. So we're not just looking at the suppliers, but upstream from there.
Yeah.
Exactly. Which is more flotillas.
Yeah, exactly. As mentioned, things will move as fast as the slowest part of the entire supply chain, which goes all the way back to raw materials, lithium and nickel and that kind of thing. And there's sometimes misconceptions a lot of cobalt, but we actually don't. Apple uses, I think, almost 100% cobalt in their batteries and cell phones and laptops, but Tesla uses no cobalt in the iron phosphate packs, and almost none in the nickel-based chemistries. So on a weighted average basis, we might use 2% cobalt compared to, say, Apple's 100% cobalt. Anyway, so it's really just not a factor. We expect to basically have zero cobalt in the future. So, I do, maybe with that, I think probably there is a long-term shift more in the direction of iron-based lithium-ion cells.
Cheaper.
Rather over nickel. As the energy density of sort of iron, or what's called typically iron phosphate, but you might as well just call it iron. The phosphate is taken for granted. But iron-based cells, lithium-ion cells, and nickel-based lithium-ion cells, I think probably we'll see a shift. My guess is probably to 2/3 iron, 1/3 nickel, or something on that order. Good, because there's plenty of iron in the world. There's an insane amount of iron. But there's much less nickel, and there's way less cobalt. So it is good for relieving the long-term scaling to move to iron-based cells mostly. And I think long-term, possibly there's a good chance that all stationary storage, that is Powerwall and Megapack, moves to iron. This is most likely the case, since you do not need to transport it, and there's less of volume and mass constraint for stationary storage. Then nickel would be really for long-range road transport, chips in aircraft, and that kind of thing.
Thank you. Let's go to the second question from retail, which is, Elon has said that Tesla will be opening up the Supercharger network to other EVs later this year.
Yeah, just so you know, that was like a 10-minute answer of not answering the question as to whether or not Cybertruck will come in 2021. Now they're going to ask about opening the Supercharger network.
Yeah, we're currently thinking it's a real simple thing where you just download the Tesla app and you go to a Supercharger and you just indicate which stall you're in. So you plug in your car, even if it's not a Tesla, and then you just access the app and say, turn on the stall that I'm in for how much electricity. And this should basically work with, I think, almost any manufacturer's cars. There will be a time constraint. So if the charge rate is super slow, then somebody will be charged more because the biggest constraint at the superchargers is time. How occupied is the stall, and we'll also be smarter with how we charge for electricity at the superchargers. So rush hour charging will be more expensive than off-hours charging because there are times when the superchargers are empty and times when they're jam-packed, and so it makes sense to have some time-based discrimination.
Yeah, we've been doing that, and it's been working, and people respond, and it helps with utilization.
Yeah, exactly. So, I think we're in Europe and China and most parts of the world. It's the same connector for everyone. So this is a fairly easy thing to do. Developed our own connector, which, in my opinion, is actually the best connector. It's small and light, and looks good. It's no standard. So we developed our own connector, which, in my opinion, is actually the best connector. It's small and light, and looks good. So an adapter is needed to work for EVs in North America. But
did he just say the same sentence twice?
And we anticipate having it available at the superchargers as well, if people don't sort of steal them or something.
We have a good solution for that.
Okay. That is just that's a constraint on the North American thing. Yeah. That's basically a vestige of history. But I think we do want to emphasize that it is our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
Oh, slam on Apple.
I think it's also important to comment that increasing the utilization of the network actually reduces our costs, which allows us to lower charging prices for all customers, makes the network more profitable, allows us to grow the network faster. That's a good thing there. And no matter what, we're going to continue to aggressively expand the network capacity, increasing charging speeds, improving the trip planning tools to protect against site congestion using dynamic pricing, as Elon mentioned. Yeah. And just continue to focus on minimum wait time for all customers.
Yeah, obviously, in order for this for the supercharger to be useful to other car companies, cars, we need to grow the network faster than we're growing vehicle output, which is not easy. We're growing vehicle output at a hell of a rate. So superchargers need to grow faster than vehicle output. So this is a lot of work for the supercharger team. But it is only useful in the grand scheme of things. It's only useful to the public if we're able to grow faster than Tesla vehicle output. So that is our goal.
Thank you very much. And the third question is, Elon said 4680 cells aren't reliable enough for vehicles. Is this referring to cycle life, degradation, or something else? Please update us on progress of 4680s and what is still needs to be done to make them reliable enough for vehicles.
Yeah, I mean, really, this is not. We'll definitely make the 4680 reliable enough for vehicles, and I think are at the point where in limited volume it is reliable enough for vehicles. Yeah. Again, going back to limited production is easy, or prototype production is easy, but high volume production is hard. there are a number of challenges in transitioning from sort of small-scale production to a large volume production. You know, not to get too much into the weeds of things, but right now we have a challenge with basically what's called calendaring, or basically squashing the cathode material to a particular height. So it just goes through these rollers and gets squashed like pizza dough, basically, but very hard pizza dough. And it's denting the calendar rolls. This is not something that happened when the calendar rolls were smaller, but it is happening when the calendar rolls are bigger. So just like we're like, okay, weren't expecting that.
Yeah. It's not a like science problem. It's an engineering problem. It's not a question of if, it's a question of when. And the team is 100% focused on resolving these limiting processes as quickly as possible.
Exactly.
Yeah, and on the reliability side, as Elon mentioned, we have successfully validated performance and the lifetime durability of the 4680 cells produced at Cato. And we're continuing ongoing verification of that reliability. We're actually accruing over 1 million equivalent miles on our cells that we produce every month in our testing activities. As you know, the focus on that is very clear. We want high quality cells for all of our customers. And yeah, we're just focused on the unlucky limiting steps in the facility, and with the engineers focused on those few steps remaining, we're going to break through as fast as possible.
Okay.
Meantime, we have a massive amount of equipment on order and arriving for the high volume cell production in Austin and Berlin, and but obviously, given what we've learned with the pilot plant, which is in Fremont, which is really quite a big plant by most standards, we will have to modify a bunch of that equipment. So it won't be able to start like immediately. But it seems like, I mean, do correct me if I'm wrong, but like, we think most likely we will hit an annualized rate of 100 gigawatt hours a year sometime next year.
We'll have all the equipment installed
to
accomplish 100 gigawatt hours, and it's possible
that
by the end of the year we will be at an annualized rate of 100 gigawatt hours by the end of the year.
I mean, my guess is more likely than not, about 50% of reaching 100 gigawatt hours a year by the end of next year on an annualized rate, something like that.
Yep.
But it could shift by a little bit. So but it's like nothing, as Drew mentioned, it's nothing fundamental.
No.
Just a lot of work.
Yeah, and even to the large roller question, Elon, right? Like on the anode side, the large rollers work great, no concerns. And so we're just learning as we go. And the nice thing about having that facility, on the fast track like we had it, and we talked about it at Battery Day, was really de-risking the big factories here. That's what we've done, and we've learned a lot. And with each successive iteration, the ramp up and the equipment installation will be faster and more stable.
All right, thank you very much. And the last question from retail is from Emmett. Can Elon do an interview with one of our YouTube channels once or twice a year? I would nominate David Lee on Investing or Rod Maurer's Tesla Daily channels as first possible candidates.
Say yes.
Yeah, I guess I'll do an interview. I mean, just bear in mind, like if I'm doing interviews, then I can't do actual other work, So it's not, it's only so much time in the day. So, but yeah, I'll do it once. No, I won't do it annually, but I'll do it once. I think also like this is the I wouldn't say the last time I'll do earnings calls, but this is I will no longer be default to doing earnings calls. So obviously I'll do the annual shareholder meeting, but I think going forward, I will most likely not be on earnings calls unless there's something really important that
wow.
that I need to say.
There you go. Elon just bowed out at earnings calls.
Thank you. Let's go to institutional questions. The first one, and we covered a lot of this already. Can you please update us on timelines for the start of production of Berlin and Austin, Model Y, Cybertruck, and the Semi? Do you expect the ramp of Cybertruck to be as difficult as it is a new process?
I think Cybertruck ramp will be difficult because it's such a new architecture. I mean, it's going to be a great product. It might, I think, be our best product ever. But there's a lot of fundamentally new design ideas in Cybertruck. Nobody's ever really made a car like this before, a vehicle like this before. So there'll probably be challenges because there's so much unexplored territory. Yeah.
Thank you. I think question 2 and question 3 we can skip, given we have already addressed it. I'll go to question 4. In 5 years' time, how much faster, better could you be at manufacturing capacity expansion using cut and paste? And what are the biggest issues you need to solve to get to that rate?
Well, like I said, I think we might be the fastest growing company in history for any large manufactured item. So those who have not actually been involved in the manufacturing ramp have just no idea how painful and difficult it is. It's like, you know, you got to eat a lot of glass, and for a manufacturing ramp, it's hard.
Yeah, I mean, I think, you know, if you look at the expansion we've done in Shanghai, you know, that factory was built in less than a year and ramped in, you know, 5 to 6 months to full volume. When you consider
longer than that, too long than that, about a year.
And when you consider cut and paste, we've repeated that, you know, in Fremont and whatever. But now with Berlin and Austin, we have new factories and new designs, and so there's always challenges, as you said, Elon, with new designs and ramping that. But I think having teams in 3 locations or 3 continents will definitely expand our ability and our capacity to, you know, grow more lines rather than just having the one factory in Fremont that we had, you know, a year and a half ago.
Yeah. So I mean, for Shanghai, it was incredible team built the factory in 11 months, but it took longer than building the factory, which was hot. It took longer than that to actually reach volume production, high volume production. So it took about a year. When you put a factory in a new geography, in order for that factory to be efficient, you have to localize the supply chain. So there's no such thing as cut and paste. It does not exist. And that, you know, it would obviously be insane to do vehicle production in Europe but send vast numbers of parts from North America. That would be that would make the, you know, producing in Europe, for example, just crazy. You've got to localize the supply chain to have efficiency, and then you're moving as fast as your least lucky, least good supplier. Yeah, it's only the supply chains where you go like, you know, 3 or 4 layers deep. It's frankly, I feel at times that we are inheriting all force majeure of Earth. So if anything goes wrong anywhere on Earth, something happens to mess up the supply chain. So yeah,
I think the human capital growth, though, of having factory here, Berlin, Shanghai, Fremont, does allow us to maybe not exponentially grow, but well, hopefully
we are exponentially growing.
Yeah, hopefully maintain that exponential growth.
Yeah. So yeah, it takes a while to hire all the people and train all the people to operate the factory. A factory is like a giant cybernetic collective, and you can't just hire 10,000 people and have it work instantly. It's not possible. I really encourage more people to get involved in manufacturing. I think, especially in the U.S., like this has just not been an area where all that many smart people have gone into. I think the U.S. has an overallocation of talent in finance and law. It's both a criticism and a compliment. Not saying we shouldn't have people in finance and law. I'm just saying maybe we have too many smart people in those arenas. Maybe.
Manufacturing's fun.
Yeah, manufacturing is great. It's a very interesting problem to solve, and obviously you can't have stuff unless someone makes it. That's how you get stuff. Yeah.
Okay, thank you very much. And let's go to the last investor question. Does Tesla plan to offer more services beyond FSD or high-speed connectivity as part of its subscription bundle going forward? What areas in particular present an opportunity?
Yeah, we don't have a lot of ideas on this, to be frank. Really, full self-driving is the main thing. Things are obviously headed towards, fully autonomous electric vehicle future. And I think Tesla is well positioned and frankly is the leader objectively in both of those arenas, electrification and autonomy. It's always tempting to try to find analogies, but with other companies or whatever. But really, the value of a fully electric autonomous fleet is insanely gigantic. Boggles the mind, really. So that will be one of the most valuable things that is ever done in the history of civilization.
Okay.
Thank you very much. And now let's go back to analyst Q&A, please.
Oh, okay.
Thank you. As a reminder, to ask a question, you will need to press *1 on your telephone. To withdraw your question, press the # key. In the interest of time, we ask that you please limit yourself to one question and one follow-up. Our first question comes from Colin Rusch with Oppenheimer. Your line is open.
Thanks so much, guys. Can you speak to the attach rates for FSD so far and
Yes.
what you're targeting in terms of the subscription levels?
Yeah, it's not worth commenting on right now. It's not meaningful. We really need full self-driving, at least the beta to be widely available, so anyone who wants it can get it. Otherwise, it would be pointless to read anything into where things are right now. Yeah.
Okay, and then just the follow-up there is about the cadence of the regulatory environment keeping up with the technology. Are you seeing meaningful evolution in terms of the regulators really understanding the technology and beginning to set some standards here sometime in the near term?
At least in the U.S., we don't see regulation as a fundamental limiter. We've obviously got to make it work and then demonstrate that the reliability is significantly in excess of the average human driver for it to be allowed, for people to be able to use it without paying attention to the road. But I think we have a massive fleet, so it will be, I think, straightforward to make the argument on statistical grounds, just based on the number of interventions, or especially interventions that would result in a crash at scale. We think we'll have billions of miles of travel to be able to show that it is, the safety of the car with the autopilot on is 100% or 200% or more safer than the average human driver. At that point, I think it would be unconscionable not to allow the autopilot, because the car just becomes way less safe. It'd be sort of like, if you take the elevator analogy, back in the day, you used to have elevator operators with like a big sort of switch that operate the elevator and move between floors. But that get tired or maybe drunk or something, or distracted, and every now and again somebody would be kind of shared in half between floors. That's kind of the situation we have with cars. Autonomy will become so safe that it will be unsafe to manually operate the car, relatively speaking. Today, obviously we just get in an elevator, we press the button for which floor we want, and it just takes us there safely. And it would be quite alarming if elevators were operated by a person with a giant switch. That's how it will be with cars.
Thank you. Let's go to the next question, please.
Next question comes from Laboichi with Wolfe Research. Your line is open.
Hi, everybody. Your cost of goods sold per vehicle is already down to the mid $37,000 range in the quarter. It's down $5,000 year over year, despite some of the inefficiencies that you talked about. And I know that a lot is going to change from here, just given how mix is going to evolve. But if you're successful on the structural pack and front and rear castings and the launch of the 4680 cell, can you just maybe give us a sense of what a successful outcome would look like maybe a year from now? Obviously, a lot has to go right, but just any kind of broad framework for us to think about.
Okay.
Yeah, it's really difficult for us to make specific predictions. It's very difficult. I think we feel confident of say at least a 50% growth year over year next year, and maybe it's 100%, but that's you need a lot of crystal balls to figure out exactly what it's going to be, and it is literally impossible to make a specific prediction. But at least 50, maybe 100, something like that.
Okay. And maybe just separately from this, can you just clarify what the status is of some of the advances in battery manufacturing, things like dry cathode mixing that you talked about on Battery Day? What's the timeline? How are those evolving?
Kind of already talked about that.
Yeah, we commented on it today already.
Bingo.
Actually, but in the facility at Cato, over 90% of the processes have demonstrated rate there, but we are limited by the unlucky few that have not, and that's what we're working on. One of them that Elon mentioned was running the full-scale cathode calendar. We're working through some improvements that we need to make to that equipment and to the actual raw material itself to not have those limitations. But again, it's an engineering problem. It's not a question of if, it's a question of when. On the mixing side, we haven't actually really had any challenges specific to your question. And fundamentally, we're still happy with the dry process direction in terms of the factory footprint, complexity, utility consumption, space, and overall complexity simplification.
Yeah.
And the cost associated with everything that I just mentioned.
Yeah. And we don't overemphasize dry cathode. I mean, it is a, I don't know, maybe it's like 10 or 15% of the cost improvement or something like that. I don't know, 20% maybe over wet.
Oh, yeah, 10, closer to 10.
Yeah. So it's like just like people don't think like this is like the Messiah or something. Wet versus dry reduces to dry is like 10% less cost than wet. So it's not, not 10%, still nothing to sneeze at, especially if you're making, hundreds of gigawatt hours a year. But it's not the Messiah, basically. Yeah.
Thank you very much. We can go to the next question, please.
Next question comes from Pierre Ferragu with New Street Research. Your line is open.
Oh, Pierre.
Hey, thanks. Thanks very much for taking my question. I have another question actually on batteries, but on a slightly different angle. I was wondering how you're looking at your sourcing strategy for the 4680. You've talked a lot about all the work you're doing to develop your in-house production. But what about asking other battery manufacturers to do 4680 cells with their own technology, maybe less innovation than what you guys are lining up internally? And I was wondering if the first 4680 cells that we'll see on the road will definitely come from Tesla's own manufacturing lines, or whether they could be coming actually from outside suppliers as well. Now, have a quick follow-up.
Yeah, we are in fact working with our existing suppliers to produce 4680 format cells. This is just a guess right now, but I see us sort of like consolidating around a 4680 nickel-based structural pack and for long-range vehicles, and then not necessarily a 4680 format, but some other format for iron-based cells. And so we right now we kind of have the Baskin Robbins of batteries situation, where we have so many formats and so many chemistries that it's like we've got like 36 flavors of battery at this point. This results in an engineering drag coefficient, where each variant of cell chemistry and format requires a certain amount of engineering to maintain.
Isn't it Baskin Robbins 31 flavors?
Inhibits our forward progress. So it is going to be important to consolidate to just maybe ideally 2 form factors, maybe 3, but ideally 2, and then just one nickel chemistry and one iron chemistry, and so we don't have to troubleshoot so many different variants.
Yeah, and towards that end, we are engaging with the suppliers that we've had good partnerships with on 4680 designs to enable that simplification. And so far so good. They're working on, they're bringing their core competencies to bear on that. We're not mandating like what's going on inside, but it's been a good collaboration.
Yeah. And we do expect to see significant increases in supply from our existing suppliers, in addition to the cells that Tesla is making. So it's both. Sometimes I get questions from our cell suppliers of like, are we just gonna make all the cells ourselves? And we're like, no, please make as many as you possibly can and supply them to us. We have a significant unmet demand in stationary storage. Megapack is basically sold out through the end of next year, I believe.
Yeah.
We have a massive backlog in Powerwall demand. The demand of Powerwall versus production is an insane mismatch. Now, part of that problem is also the semiconductor issue. So we use a lot of the same chips in the Powerwall as we do in the car. So it's like, which one do you want to make, cars or Powerwalls? So we need to make cars, so therefore Powerwall production has been reduced. But as that semiconductor shortage is alleviated, then we can massively ramp up Powerwall production. I think we have a chance of hitting an annualized rate of 1 million units of Powerwall next year, maybe, sort of on the order of 20,000 a week. But again, dependent on cell supply and semiconductors. But in terms of demand, I think there's probably demand for in excess of 1 million Powerwalls per year, and actually just a vast amount of megapacks for utilities. As the world transitions to a sustainable energy production, solar and wind are intermittent, and by their nature really need battery packs in order to provide a steady flow of electricity. And when you look at all the utilities in the world, this is a vast amount of batteries that are needed. That's why, long term, we really think, sort of combined Tesla and suppliers need to produce at least 1,000 gigawatt hours a year, and maybe 2,000 gigawatt hours a year.
Okay, great, thank you. And I have a quick question. I know, Elon, you don't think it's meaningful today, but I'd be curious to know, if you have any stats about when you announced a new pricing on a FSD moving from 10 grand upfront to 199 without the lock-in. I'd be curious to understand, how it affected behavior, and if you saw like a massive uptake in the service. And I'm not thinking about people looking at it as an FSD, but more, to try the most advanced version of autopilot and to try it. So in the first days you've announced the pricing, have you seen like a very significant spike in the take rate? And can you give us a sense of how big it was?
Okay. Someone?
Okay, so if you're asking, like, is the FSD take rate too expensive, and that's why we're doing subscription? Or I'm not sure if I understand your question correctly.
No, my question is from the time you announced like the subscription at the $199 per month, how much did like the take rate increase? Like the percentage of people who basically took the subscription as they bought a new car versus how it was when they had to pay 10 grand up front?
Yeah, this is Zach here. I mean, I think we're still early in understanding how FSD subscription will unfold, but a couple of data points here. So we took a look at our backlog to see, of customers in our backlog who have ordered FSD, did they cancel, presumably to go to subscription after they take delivery? And the level of cancellations there was not seeing cannibalization there. It's possible that that changes, but that was also part of our pricing strategy at $99 and $199.
Yeah, I mean,
also part of our pricing strategy at $99 and $199.
Yeah, I mean, it's like any given price is going to be wrong, so we'll just adjust it over time as we see, the value proposition makes sense to people. So we're just really, I'm not thinking about this a lot right now. We need to make full self-driving work in order for it to be a compelling value proposition. Otherwise, people are, kind of betting on the future. I mean, right now, does it make sense for somebody to do an FSD subscription? I think it's debatable. But once we have full self-driving widely deployed, then the value proposition will be clear. And at that point, I think basically everyone will use it. Or if we a rare individual who doesn't.
Okay.
Okay, thank you very much for your help. And I think that's all the time we have for today. Thanks for all your questions, and we'll speak to you again in 3 months' time.
Great.
Have a good day, everyone.
Okay, let's do a recap. So here's a recap of everything that you need to know about Tesla today. Okay, ready? All right, give me 1 second here. All right, here is a full recap of everything that you need to know regarding what the heck happened with Tesla today in terms of the earnings call and the actual earnings. I'm going to start with the earnings call, and then I'm going to talk about earnings a little bit. We'll keep it short and concise. So here's the scoop. Elon Musk was very frustrated today, mostly frustrated because a lot of the issues that it sounds like they're facing have to do with problems that are out of their control, specifically regarding chip shortages, which Elon Musk described as quite serious. In fact, he seems so frustrated with how long it's taking and how these things are so out of his control that he doesn't even want to answer to Wall Street anymore directly by being on earnings calls, which quite frankly is fine because he also kind of said he doesn't like doing interviews because they take away from his ability to do work, and he'd rather be working and helping produce or come up with new ideas. And so with that said, Elon Musk did continue to express his frustration about supply shortages, says that their growth rate is going to be determined by their slowest supply part, Something that I thought was very interesting is he mentioned you can't just copy and paste gigafactories throughout the world. You actually have to create brand new supply chains in every country that you're in, because it doesn't make sense to ship parts from the United States to Europe just to be able to build cars in Europe. You're better off having all those parts locally sourced. He does say that the supply progress and chains are very difficult to predict, says a lot of progress is being made, but there's a lot of work still to do. They totally punted the question as to whether or not the Cybertruck would come out this year. Basically, the answer is it ain't coming out this year. They said the Cybertruck would come out after the Model Y begins production in Berlin and Austin, and the Cybertruck would get produced in Austin. Well, the Y is only going into limited production this year, hopefully in Austin and Berlin. And then during the call, they also mentioned that they're hoping to get to beta this year on the Cybertruck, but punted the question on whether or not the Cybertruck would actually come this year. That's because, let's be real, we know the Cybertruck ain't coming until probably early to mid next year, especially since Elon Musk mentioned that you've got the Cybertruck is going to probably be their most difficult vehicle to ever engineer. Elon Musk also mentioned, he kind of complained about the agony of manufacturing, saying only Ford and Tesla are these two companies are the only American car manufacturers to not have gone bankrupt. It's very easy to start up, but as soon as you start winning, you basically mark your defeat on the calendar. He quoted this as, "The seeds of defeat are sown on the day of victory." In other words, it's really hard to manufacture cars and do it well, but they think they're on the right course. They think they're doing a great job, and there's a lot of work to do. Talks about great progress on the 4680 battery cells. A lot of talk about how what they really want to do is use the 4680 cells as a nickel-based cell for long range, and then cheaper batteries like the iron phosphate batteries for shorter range production models. Elon Musk referred to 31 flavors, Baskin-Robbins as 36 flavors of batteries that we have these days, and that it's a hodgepodge of batteries that are available, and we really just need to have a short range model and a long range model. That's it, and that's what they're trying to get to. He also mentions that right now production feels a whole lot like 2 steps forward, 1 step back. I'll tell you, it was a very kind of conference call. Wasn't like, it certainly wasn't hypey. It was just realistic. Now, some people, I think, mistake Elon Musk's speaking style for negativity or bearishness. I disagree with that. I think everything he said was bullish. It was just real. It was just real. Elon Musk did say he's highly confident his cars will be capable of full self-driving. We did find out, and this was a question from the earnings sheet earlier, that the S and X didn't just contribute to a lower margin, but they actually operated at a loss because so few of them were produced. That's very important because that means next quarter we'll probably see margin skyrocket. Lower sales in general and administration because they're becoming more efficient, which is very, very good. They do plan to at some point open up the Tesla charging network because they don't want to have a walled garden, which then competitors can say is a reason not to use Tesla because, oh, well, it's a walled garden. It's like Apple. Elon Musk kind of coughed and is like, we don't want to have a walled garden, which competitors can use to their advantage. Apple is kind of the quote as to how he said that. Dynamic pricing will be based on demand, so they'll change pricing to try to make sure that if they add new vehicles to be able to use these chargers, that there's actually availability for them. They do realize they have to grow the charging network faster than they have to grow the rate of car sales, which they recognize as a big challenge. They also see that they're using the same chips in the power walls as they are in the cars, and so they're prioritizing car production. So anytime they have too much car production and they don't have enough chip supply for all the power walls, they sacrifice the power walls and they do the vehicles. Elon Musk hopes we can get to 1 million Powerwall production, million units of Powerwalls produced next year. Maybe was the argument. They're also obviously trying to get to 1 million units of vehicles produced. The hope was this year, but with supply constraints, it looks like that's not going to happen. They also see a lot of mega pack orders coming in as the world transitions to sustainable. Jumping just brief sort of recap from what we did earlier. This is the earnings sheet here from earlier. I just want to hit the very important highlights here. Tesla did beat on revenues. Tesla beat on the bottom line. They had big top line, bottom line beats. the very important numbers that you want to take away are the fact that automotive gross margin came in at 28.4%, including vehicle credits. That is almost as high. Actually, it's higher than the Q3 2020, 27.7%. And this right here is so important because it actually includes the fact that we had a loss on the S's and X's, which is really incredible. EPS was a wonderful beat. There's that talk about negative margin. We had mega packs coming in very strong. Expect to see more of those coming in, which is wonderful. We got a little bit more, again, more complaints here about bottlenecks in production. A lot of production bottleneck complaints. And I think that's why Elon Musk was relatively frustrated and doesn't want to be part of the earnings calls anymore in the future. Still trying to be competitive on Solar Roof. No announcements really there. Semi-truck program moved to 2022. Otherwise, we didn't really get much info. It's just sort of more of, hey, we're working on it. We're producing. Leave us alone. We're doing our best here. We're doing a good job. Sorry, Wall Street. We don't have a bunch of candy to give you, but we're working on it. So get off our backs. And there you go. That's a summary of what was said at Tesla today. Thank you very much for watching this broadcast or this video. And if you enjoy this kind of content, make sure to subscribe to the channel, support the channel. And folks, we'll see you in the next one. Thank you. Bye.